Hi, real estate broker Josh Barker, and thank you for checking out our market update for the month of August 2026. Let's go ahead and dive right into that sales report by looking at the closings for last month here on the multiple listing service. Last month we finished at 220 closings, and to add a little context, if you go back 1 year ago, we closed a total of 232 in the same month of July. Now the interesting thing is if you look at last month and the month prior to, and this would be for June, there was a total of 285 properties that had closed escrow. And so we've dropped quite a bit month over month. And diving into that a little closer, what we think is that interest rates going up combined with inflation and fuel costs going up, and the reduction in the state of California offering some programs for those first-time home buyers to assist them with their down payment going away, that's contributed to the drop-off in the total sales closed report that I just reported to you now. The next thing to look at is the actual pendings. The biggest noticeable thing that's changed in pendings over the last 90 days is that right now we're averaging the low 300s on a daily basis of total pendings in the whole market. And if you go back about 90 days ago, we were sitting in just below 400 as the average daily number of pendings that were in the market. So obviously it's a pretty big change just in the last 90 days. Now the question will be, how will that translate into the housing market, and will it have an effect on pricing? And so far we would say no, it hasn't. The absorption rate currently is sitting at a 4.5 months supply, which means it would take 4.5 months for the existing inventory to sell off if nothing else came up for sale. Now 0 to 3 months we know is a seller's market. We're not there now. 4 to 5 months is what we call a neutral market, which is where we're at now. And anything over a 6-month supply is what most people would call a buyer's market. And currently it's in that 4.5 month supply. It means that prices are pretty flat. We're not seeing too much of a pullback, but this last 30, 60 days has been noticeable. We want to see what happens here going into the third and fourth quarter together. That's going to give us a better understanding of where pricing might be going in the future. Now, when it comes to interest rates, right now we're averaging around 6.875% for a 30-year fixed mortgage with good credit. That rate is up and it's still stubborn. It's not coming down right now. And currently we're looking at what the Federal Reserve might be doing. Recently they had a meeting, they didn't change the rate. But looking into September, everybody's kind of curious about what that might look like. And as like for you, we're just gonna have to wait to see what happens. The rental market, it's performing extremely well. We looked at the research on that recently. It said 4 to 5% vacancy rate. And if you think about it, that basically means that when a property becomes available for rent, after a tenant moves out, it's getting, maybe a little bit of updating done to it, and it's being represented to the market. In most cases, those properties are re-renting extremely fast. And so currently in the city of Redding, according to Zillow, the average 3-bedroom, 2-bath home with a 2-car garage is running, if you can believe this, between $2,280 a month and $2,380 a month. So as you can see, those rental markets are extremely tight, price is pretty strong. And I think you can see in the future that might push buyers back into the purchasing side of the market if that trend continues. Next thing to look at is just the housing market on the new construction side. Looking at this report, and this is some tough news to report. Year to date through June, the city of Redding has reported that they've had a total of 49 permits that were pulled. And again, to provide you with some context, if we go back 1 year ago, year to date through June, it finished at 135 permits pulled. So we're way off from where we were at. And thoughts being on that is that if we don't have a lot of new construction and those price points between the high 400s and the mid 500s, that's where D.R. Horton has been primarily providing product to the market. When they pull away eventually here in the next couple of months, where are those buyers going? And in many cases, we think that they might start shifting back into the resale market, which means that price point between $400,000 and $500,000 might receive some additional demand that it didn't have before, with one caveat. Anybody that's really interest rate sensitive, D.R. Horton was offering some incentives that really the average homeowner will not be able to offer. But for everybody else, we might see some more demand on that side of the market. The last thing I just want to touch on in this video is just the foreclosures. I've had questions, and it's good reasons to ask, but what's happening with the foreclosure market? Looking at that closer here over the last few days, what I can tell you is this. The reports are saying there's a total of 175 properties in Shasta County in some stage of foreclosure. Now, if you look at bigger picture at that 10,000 foot level, there's about 58,000 single family residences in the county. of which only 175 are in some form of foreclosure. And we know historically only about 1/3 of those ever hit the market, which tells us that, for the exception of those that are going through that distressed moment, it's not having a huge impact on the market overall. We don't see that being a drag on the economy here locally, so I'm not thinking that foreclosures is something that we have to be concerned with, at least at this point. So in any case, if you have any other questions regarding the real estate market here in Shasta County, just know we're always here to help. Thank you again for taking your precious time with us. Have a great day.